Hello, I'm Holly Sexton with Abound Credit Union, Public Relations and Financial Education Professional. And you're here because you want to raise your financial IQ. Well, maybe you learned the basics long ago and you want a refresher, or this could be the first time you're learning about how to manage money. Well, either way, welcome and we're glad you're here. Please take a moment to like this video and hit the subscribe button to see fresh videos from Abound in the future. Why? So you can make more possible for yourself and for your family. So let's get started. Say hello to all my friends and my teammates at Abound. Let's begin with Suzanne. Suzanne, share your name and what you do at Abound, please.
Hi, everyone. I'm Suzanne Booth. I'm the manager of learning and organizational development for Abound.
Thanks for being on, Suzanne. Appreciate it. You're up next.
Yeah, I'm John Johnson. I am the systems administrator here at Abound.
Hi, John. Hey, Chauncey.
Hi, I'm Chauncey. I'm a manager in the Member Solutions Department with a talented team that's ready to help you solve your resolutions.
Love that. Hey, Mike.
Hi, Holly. I'm Mike Enlow. I'm the main office manager here at Abound.
Rachel.
Hi, I'm Rachel Hoskins. I'm the application specialist here at Abound.
Welcome. We also have Tanya on the line. And we welcome Lauren.
Hi, I'm Lauren Nix. I manage our debit cards and credit cards along with our ATMs at Abound.
Welcome. Glad you're on today. Did I miss anybody? All right. And a shout out to Allie. Thank you so much for taping for our Abound Credit Union YouTube channel. All right. So let's get started with talking about a credit union, what it is and how it differs from a bank or a cash advance business. So credit unions don't have customers or clients like banks do. Credit unions have member owners. So everyone who joins a credit union has a share account. And in the share account, it's $5. That's what's required in order to open membership with a credit union. And the $5 in the member share account is the shareholding. So that's what makes someone a member and an owner, which differs from a bank. A cash advance, like a cash advance business, is a short-term unsecured loan that is designed to let you access funds from your next paycheck. So paying back a cash advance can be troublesome because the rates are typically higher, way higher than traditional financial institutions. So Mike, what are some of the benefits of becoming a credit union member?
Well, Holly, you just pointed out a key benefit, and you're a member owner. So you are an owner of the credit union. Another huge benefit is you have a vote. So you're able to vote for your board of directors. And you also have one of the most important things also is higher savings rates and then lower loan rates.
That's great, Mike, and that differs greatly from a cash advance, as I mentioned, because of those lower rates. What's a scenario if someone goes to a cash advance business as compared to being a credit union member and having a loan with a credit union?
Well, the difference is astronomical. If you go to a cash advance store, your interest rate could be astronomical. Versus, coming to a credit union for a car loan or an unsecured loan, your rates could be as low as, 2.5%, 3%. I mean, it's just I'm stuttering here, y'all. So here's blooper number one. But the benefits are astronomical. Think of the money you could save, versus a 400% loan to cash a check versus get an auto loan to help whatever you're needing to do at 2.5%, 3%. I'll quit there, Holly.
Well, which can save someone thousands of dollars over the life of a loan if they have one, as opposed to a cash advance. So thanks for jumping in there, Mike. I appreciate it.
Thanks.
So the reason it's important to know the difference between the three is because it will help us reach our goals more efficiently. So let's talk about financial goals. One of my goals is to travel. Right now, I'm saving to go to Italy. I'm very excited about that. Sometimes when I save that money back from every paycheck, for the Italy trip. It hurts just a little bit because I think about other things that I could be spending it on, but I know that goals take they take some practice, they take a little bit of work, and but overall, I know I'm going to be very excited to be in a gondola having a great time in Italy. So that helps me reach my financial goals. Lauren, would you jump on here and share some of these financial goals and share your own?
So my financial goal is nowhere near as exciting as what yours is, Holly, but mine is to pay off my mortgage faster than the 30-year term that we signed up for. So in the long run, if I get to meet that goal, I'll be able to take those trips to Italy with the interest that I save from it.
I love that. That's fantastic. Yeah, that's another goal too. But some very reasonable financial goals are saving for an emergency. We know, unfortunately, that most Kentuckians don't have enough money to cover a $600 emergency. So saving for that emergency fund is a reasonable goal. Also, refinancing an auto loan, as Mike mentioned a few minutes ago, about how much a person can save over the life of a loan by refinancing or having a lower rate. Building credit, which we'll talk about in a few minutes with Rachel, and also setting a good example. So does anybody want to jump on and talk about why it would be important to set a good example? Anybody have kids or grandkids?
Holly, I'll jump in. We're not getting any younger, so we're going to not be able to work all of our lives. So it's very important, as one of our financial goals is to prepare for our retirement. So, I highly encourage people you can never be too young to start thinking about this. And the sooner you start, the more money you're going to be able to save and be more comfortable in your retirement.
That is a great reason to have a financial goal, to set that goal, and that would be an incredible impact on someone's life. John, how would saving for an emergency impact someone's life?
I mean, well, emergencies, they're unplanned. And sometimes we run into things, an emergency that can really make us cash strapped. Oftentimes people will rely on credit cards or something like that to help cover for the emergency. But if you're prepared and you save up and you're prepared for an emergency, it really is just going to set you up to make smarter decisions and take care of it without setting yourself up to be in some kind of more financial debt than you may already be in.
That's such a good point. And I think that as far as financial goals go, that can also impact a person's health, because we know that when we're worried about our finances, it can impact our health negatively. So, John, that's such a good point. And I think that could also parlay into physical and mental health as well as financial health.
That's funny, Holly, because I was thinking the same thing too. I was thinking when you're saved up and prepared for that emergency, then you can work through the emotions of just dealing with that emergency and not having to deal with the added emotions of I couldn't afford this. So I think it gives a peace of mind when you actually have the savings there for it that you wouldn't have otherwise. So I really love that you shared that mental ramification there, because I agree.
100%. You're right. I hadn't thought about that specific component, but you're right. It can be so stressful, and it can become just something that's traumatic. And instead, we know that we have enough money to cover it, and then we just deal with whatever it may be. So, Rachel, what would be the impact of setting and reaching the goal of paying off bills?
One impact that I have personally experienced in my life that I think I enjoy more than anything is you get to have more discretionary income when you pay off your bills, or what I like to call fun money. So going to Starbucks once a week doesn't seem like so much of a burden when it comes down to looking at your finances on a larger scale. And it may give you the extra money to do exactly what you and Lauren talked about earlier, to save for a trip with your family, or to pay off your mortgage earlier than you anticipated. The other great thing about paying off your bills is it does improve and help your credit, and it gives you the opportunity to be able to maybe refinance your auto loan and get a lower rate, or just the freedom to prepare for those emergencies like John, you and Suzanne just talked about. It really does have a huge impact, and you can really snowball that effect. So you pay off one thing that's small, maybe it's your smallest credit card, and then you take that extra money you have and start paying off on your next biggest bill and work your way up from there. And it is amazing to see the impact that that has and the amount of money you really didn't realize you're spending on all of these bills until you don't have them anymore.
And that brings up an outlier, which is confidence, because once you pay off something, there's an excitement there. And I like to have a ceremony where I shred a bill or something like that. And that has the impact on my life of building my confidence, not just with my finances, but just in general, showing me that I can make a difference. And I have one more question on this one, or fill in the blank here for Chauncey. What if someone's financial goal, was to build credit? So Chauncey, what would be the benefit of building credit?
There's a ton of benefits for building credit, but I'll give you a scenario here. So when you build good credit, you put yourself in a better position to get approved for loans, credit cards. And if you're looking to purchase a vehicle, it gives you better buying, negotiating power to do so. Once you get that vehicle, you're going to need insurance. So having a good credit score, or building good credit, will help you get better rates for that insurance. And of course, if you get a new car, you got to keep it somewhere safe. So that good credit is also going to help you get approved for apartments, or even a home with a garage to keep that in. And then, just like everybody else right now with social media, you're going to want to share that. You're going to want to share that new Ferrari or Fiero, either one, same thing. Do so on social media. So if you don't have a phone, building good credit and having good credit is going to put you in position to be able to get a good iPhone 12, that you can share with on social media, help you get, better contracts for that phone where you don't have to make a large deposit, or maybe even not a deposit at all. So.
Thank you. So that's like saying there's a ripple effect.
Yeah.
And yeah, for sure. Yeah. Go ahead, Mike.
I'd like to give you a prime example here of, if you and I buy the same automobile and we finance the same amount, if your credit score is better than mine, you're going to get a lower interest rate than I would if my credit score was higher than yours. So what does that mean? Well, that means your monthly payment is going to be lower than my monthly payment with my credit score being lower. So to think about that is, you're going to have more discretionary income, as Rachel said a while ago, than I will. And, that has a part to play with your mental health as well, because you're worried about making a higher payment than what you probably should be. So it's important to manage your credit score, pay your bills on time, and in order to receive those lower rates.
That's a great point, and that goes right along with creating possibilities. And at Abound, when we say creating possibilities or making more possible, that's what we mean. Knowing the why for our financial goals is important. So Suzanne, how are we going to get there?
We're going to get there, Holly, by being smart. So one thing that I love, because I'll own it, I'll admit it, lifelong terrible goal manager right here. But once I came across the SMART method, I can say it really was a game changer for me. So the SMART method of goal setting means that you're going to make it specific, measurable, attainable, relevant, and time-based. What I found personally was that I was good at some of these and not so great at other ones in the beginning. So it definitely took some practice. The one that had the biggest impact out of those pieces for me was specific. I found that I would, especially when I was talking about my financial goals, I would say, yeah, let's put some money away, but then I would leave it at that. And so I would measure it, I would gauge it. It was attainable. I wasn't trying to become a millionaire before 30 or anything. Well, some people do that. Kudos to them. Not attainable for me. It was relevant to my life, and I would give myself a time frame. But I found that it was still kind of difficult until I really learned to master being specific. And so I loved your sharing earlier of going to Italy. That is something that you can definitely, plunk right into the SMART method. You are specific, you know how much it's going to cost, and you've got everything else in place to make that happen. So definitely smart method of goal setting can really just simplify the process and then help you achieve those goals. And then that goes back to the confidence thing you just spoke of.
Thank you so much, Suzanne. Is there something that you can share where you've used a SMART goal? It doesn't even necessarily have to be financially, a time or an instance where you used a SMART goal and you had a positive outcome.
Actually, getting away from finances a little bit, I use that in my career professionally. So when I started at the credit union, I started at our call center at MRB, and I made a goal for myself. I had a 3-year goal. I wrote it on a piece of paper and I put it in the top drawer of my desk. And I just had on there 3 things I wanted to do in the next 3 years. And so looking at it every day, I put my keys right next to it. I did the old Michael Jordan thing with his note in the locker. And those goals were achieved in less than 2 years. And so absolutely by putting it there, and I had specifically drawn out, I'm going to do this, I'm going to do this, I'm going to do this. And wonderful things happened that really launched my career to get me where I am now.
I love that. Woo woo. I get excited. I can geek out on some SMART goals. So thank you so much. All right. So we know our why and our basics of setting goals. We're using the SMART method. Now, John, will you jump in here and read step by step what we're going to do to get started with setting our financial goals?
Okay, so step 1, write the goal down. If you just think about your goal, then, things happen, you get busy, eventually you just forget about that you're even trying to, attain this goal. Write it down, write it somewhere where you can see it, like Suzanne did. Step 2, add one behavior that will help you reach your goal. There's bad behaviors and good behaviors. Try to adopt some, good behaviors that are really going to help you achieve your goal. Step 3, schedule 10 minutes once a week to check in with yourself. If you've just got something wrote down and I look at it every day, you really got to check to say, hey, am I doing what I set out to do? Am I doing my behaviors? So check in with yourself. Make sure, to keep yourself on track. And step 4, set a date to reach your goal. If you don't set a date, then, you could give yourself the excuse of, it could last a lot longer, or down the road, you say, well, I never really set a date to be by this time. So it gives yourself room to, relax on it. So try to set a goal, a date, and keep yourself, in check with that date. Make sure you kind of, you set yourself up for it, follow through with yourself to complete it.
John, that's really important to follow through, and we'll talk about that a little bit more in a few minutes. But let's move to step 2, which is add a behavior, one behavior. And the reason I used one is because we have to start somewhere, right? And we don't want to get overwhelmed. So add one behavior and then check in with yourself. But let's talk about behaviors in general when it comes to setting financial goals. So Chauncey, what are some behaviors that will help us reach our financial goals?
So to me, behaviors is probably one of the most important things. Holly, you mentioned earlier that, one of your goals was to take a trip to Italy. I think Laura mentioned wanting to pay off her house a little bit earlier than the 30 years. But, pertaining to the Italy trip, again, one of the best behaviors that you can have is first writing down that goal. And when you're writing down that goal, the goal needs to be so vivid that if it's a trip to Italy, that you're already imagining yourself in the gondola. Or you can smell the salt water. You can see the people or hear the people whispering on the bridge that you're crossing under. But it needs to be super vivid. Once that goal that you have is so vivid, then that's going to be able to influence your decisions that you make about reaching those goals. Whether it's, is it okay for me to spend money here? How is this going to affect, me attaining my goal? Is it going to put me further away, or is it going to put me closer? And if you're able to do that, again, it's going to make it a lot easier to hit those goals. Another behavior is avoid emotional decisions. Those are like sporadic decisions, or purchasing those things right there at the cash register that you didn't plan for or wasn't on your list. That's going to cause you to dig into extra money that you didn't have. And then, one of the other behaviors is also learn to pay yourself first. When you get paid, just make it a habit start saving money, putting that money away, then taking care of your bills and things like that too. And then if you happen to have any left to go buy your Starbucks and things like that too, then, all the more fun for you. But just getting those three behaviors right there. Again, just painting a super, super vivid picture of what your goal wants to be. That's going to help you out in the long run.
Great tips. Thank you so much. And I like that you mentioned that impulse buy portion. If I do a click list or pickup or something like that at the grocery store, I'm not standing there at the end cap or checking out. And so I'm not tempted to buy those extra things. There's a lot of psychology, you're right, that goes along with that. So reducing the opportunities for us to have impulse buys. And for some, that may mean removing a DoorDash app. Nothing against DoorDash, but a food delivery app, or removing a temptation that you have that would cause you to spend more money. So those are some of the behaviors that will help us reach our financial goals. So now we need tools. So John, will you share with us some of the tools that you and your wife like to use to help you reach your financial goals?
So the thing about finding a tool is, you're really going to have to find something that works for you. There's plenty of apps out nowadays. Different things are going to work for different people. You can even use things like Excel, Google spreadsheets. You can create a spending diary and just kind of keep track of yourself. Checking account register, the Abound app. If you go online, in the Play Store or the Apple Store, you're going to run into a bunch of different things that you can do. Some of them allow you to, share with your family. So, it can become a family thing and you keep track of each other. I think the key is really, find what works for you, because if it doesn't work for you, then you're less likely to do it.
Agreed, 100%. And you also get in the habit as well. Some credit card companies, they do offer that. They offer tools, money management tools. One that I like is Mint, M-I-N-T. Not only does it provide me with credit score information, it lets me know when my credit score goes up and down. It also lets me know like my net worth. It lets me know how it tracks my habits for the month and lets me know if I'm spending more on entertainment, which during the pandemic, that hasn't been hard, by the way. My entertainment budget is zero. So I've been able to put that in other places. But we also have digital tools for success on our website. Suzanne, would you check that out for us?
Absolutely. And it's funny that you mentioned the lower entertainment as a result of our current societal situation, right? Because I think our tools actually parlay into that very nicely. So the tools that we offer from Abound Credit Union for digital access and digital tab keeping of your money, if you will, are just really great, especially in a time when maybe it's unsafe or maybe you just have some anxiety about going out. You don't have to go to a branch to make a deposit. You can do a mobile deposit through the app. And I think that's wonderful. It's something that my high school age daughter has been exercising more for fun than for fear, because she's pretty fearless right now and doesn't get the no entertainment thing that's going on. But it's been fun watching her take a birthday check that she got in August and, submit it through a mobile deposit. So it's just been great watching that be passed on. But I mean, I moved money from my account to her account. I wish it was vice versa. It's not. And I can, when I have lunch with a friend in an open outdoor area, I can pay that friend back through our online offerings too. So it's great that I can send money, within my account to my daughter's account to my friend. I can also send money to an account I have somewhere else. I can pay my auto loan that I have. I can transfer money from my line of credit. So all of that stuff is literally at my fingertips. And I think that's never been more relevant than today for myself and for all of our members. And I do, I've secretly enjoyed that I've been able to watch this be uncovered to my daughter, who's 14, because she's like, oh, wow, I can do all this online. You can from now going forward, like you can. It doesn't matter if we can go into the branch to see Mike or not, although we still do.
Well, he wears a mask, so no, that's a great point. And that also takes us back to this, all full circle stuff. It takes us back to the goal of modeling, or if you want to share good behaviors with your children or your grandchildren, you're modeling those good behaviors to your daughter, and you're teaching her. So you're hitting a goal there, even if indirectly, even if that wasn't one of your financial goals. So that's
For
fantastic.
sure.
And
Yeah.
so if you use the website or the app at aboundcu.com, there's also budgeting tools and calculators. So if you have a scenario, you don't necessarily have to reach out to someone. Maybe you're just dreaming, or you're sitting around watching Netflix and you're like, I wonder how much it would cost for me to finance or refinance, or I want to buy a house. I wonder if I can afford that. You can check out the budgeting tools and calculators at aboundcu.com. And one of the things I'm always, always, always talking about is financial education at aboundcu.com. And Suzanne, you've experienced these 5-minute modules too, right?
I absolutely have. Actually, Holly, if I can share. So, in my role, I help onboard and initially train our new employees. And so, we do take some time in those new hire classes, and we hit it pretty heavily when we first were introducing these modules. And we provided time for them to complete some of these because they're short, they're informative, and it was overall a really good experience. They were leaving our training environment, walking into their new role, and they've already completed a handful of these, 5-minute, 7-minute modules, and they were better for it. Sometimes it's scary coming into that role, especially if you're new to the financial world, no matter your age. And so that was just laying a really sturdy foundation. And it was very, again, simple. They're quick and they're engaging. So it was a fun component to add in and layer into our training classes for our new employees.
I love that. That's great. And it really is 5 to 7 minutes per module. So as Chauncey talked about earlier, behaviors, and John as well, setting aside that 10 minutes, if we wanted to add that to our behavior list, and I highly recommend it, no matter what your age, and actually I believe the modules are for 13 and up, so 13 to 100. You can go to aboundcu.com and click the Learn tab to check out those modules. But what if you built it into that 10 minutes, or you built it in and made it 15 minutes, and you spent 15 minutes a week just checking in with your SMART goal, checking in with yourself, making sure you're on track, adjusting behaviors, and then you spent 5 minutes raising your financial IQ, just saying. So and I love to hear, Suzanne, how you're using that for new Abound team members. That's awesome, because that brings a lot of confidence for them.
Yes.
Yeah.
All right, next up, don't pay for things that are free. That's another tool and habit that you can use. Lauren, will you talk about the features and benefits of free checking at Abound?
Absolutely, and the name of it sums it up right there. So it's absolutely free. There's no cost to you as far as a maintenance fee or anything of that sort. If you have a direct deposit with us, you can get paid up to 2 days early. And then another feature that you all hit on the previous slides is our online banking and mobile banking. That you have that at your fingertips, and that's something included with your free checking account.
Lauren, what are a few other things, or even one thing you can think of that people pay for that they don't have to? Some people say coffee. If you can drink coffee at work, drink coffee at work. Or what's something that you use that some people pay for that you can think of?
One thing that comes to mind for me is a debit card. I know there's some financial institutions out there that charge you to have a debit card with them. That's something that we don't charge you with, and give you access to that immediately with our accounts.
That's fantastic. That's a great example. Thank you for sharing. Appreciate it. All right, Chauncey, let's talk about savings and investment options.
Awesome. We have a bunch of savings and investment options here. So we have a savings account, which most financial institutions, you pay interest, which compounds over time on money that is deposited in this account. We have a money market account, with savings account with check writing capabilities. All right, you can write checks from the account, but there may be restrictions to this one. Certificates, which are otherwise share account. A deposit is held for a specific period of time, 6 months, 9 months, or 1 year. Could be even more. The institution pays interest to the certificate holder on a deposit during that time of period. And then last is the online savings account, which accounts are managed and funded primarily online. So all these deposits and transactions are done electronically as well. So.
Thank you, Chauncey. And now it's team time. Woo woo! Everybody put your hand in. I'm just kidding. So how can improving our credit scores help us reach our financial goals? Anybody?
Well, yeah,
Holly. Oh, sorry, Chauncey, you can go ahead.
I was just going to say, just improving that credit score again. As I mentioned earlier, you know, it just puts you in position to be able to do a lot more. With nowadays, with a lot of even employers, you know, looking at credit to be able to determine if you're, you know, able to be hired through that company. Having a good credit score, improving credit scores can help you be able to get that, you know, position that you want.
For sure, Chauncey. Thank you. And Rachel, you and I talk about credit scores a lot. Let's look at this chart and talk about, yes, higher is better, but the 450 being very poor that's not Abound language, right?
That's right. And I think the important thing to remember with your credit score, unlike other areas in life, with a credit score, we all start out at the same place. Not a single person starts out in life with perfect credit. It doesn't start from the top and work its way down. You start from the bottom. And that was one of the things that was really interesting for me when I first started out on my financial journey and started learning more about financial education was, you know, I didn't start out with a 500 as my credit score. I started out with nothing. And I had a financial institution, you know, take a chance on me and give me my first line of credit. And I was able to build it from there. And just because you have a 450 doesn't mean, just like the scale says, it doesn't mean that you aren't good at managing your money. There are life circumstances that come into play here. There are things that are out of your control sometimes. If you sign up as a joint on a loan with somebody to help them out, to help get their credit started, and maybe they're not able to make their payments, or like we've talked about earlier, emergencies happen, things come up. The coronavirus is a great example. My husband was laid off from his job for 2 months. And that was a difficult financial time for us and our family. And we were luckily able to make things work and figure it out, but that's not the circumstance for everybody. So you may miss a payment here or there, and that does affect your score. But the great thing about your credit score is it's constantly evolving. I get alerts monthly. My score goes up by a point, down by a point, but I don't take those things to heart. I don't take them super personally. I'm not hard on myself about it because I know that by this time next month, my score could go up again. It could also go down again. It just depends on how I manage my money and how I use my credit. And the other important thing to know is I may have a 670 with Abound, but I also may have a 540 if I go to another financial institution. It's all dependent on the type of credit score that institution uses and what they use to factor your credit. That's the one thing I love about here at Abound is we don't just look at your number. We're not looking at that 650 or the 700 you have. We look at you as a person, as a shareholder and a member here with us. So we look at the history and length of your account. We look at the types of accounts you have with us, your relationship, the area you live in. And we really do try to fit and mold our loans to help you reach your financial goals. And that definitely plays right into this slide here with credit score components. When I started out on my credit journey, I had credit cards and that was it. And I didn't realize that only having credit cards actually had a negative impact on my credit score. It wasn't until I got my auto loan and then I saw my credit score jump by 20 points just because I had my auto loan and made my payments on time. And same goes for if you maybe have credit cards and a car, but you don't have a house yet. If you get a mortgage, that's going to help improve your credit score. It diversifies that portfolio, and it helps show lenders that you are responsible with your credit. And the same goes with payment history. It's the biggest piece of this pie right here. You can miss a payment. It happens to everybody. It's happened to me plenty of times. I forget or I'm not reaching my SMART goals like Suzanne talked about earlier of making sure that I've got everything paid when I need to, even if it's missing it by a day, but making sure that your payment history is consistent. And if you do run into a situation where maybe you can't make a payment that month or something came up and there was an emergency and you didn't have that savings built, it's important to have that conversation with your financial institution. Call them, give them a heads up. That's one thing I know Chauncey and his team do an amazing job of is working with our members to help in any situation that you face, good or bad. We're here for you and we're here to make that as comfortable of a process as possible. So understanding your credit score, understanding that we all start from the same place, and then just like on this slide shows, knowing what each piece of that pie means and how it plays into that is really going to help you be successful.
Agreed. Thank you so much for your perspective. And Mike Enlow, when I went to see him, because I've trusted Mike for a long time as a financial advisor, he explained length of history to me and how I can go into a store and they offer me $25 or $45 if I open a credit card that day. And then they say immediately, well, you can just pay it off and never use it again. And then you get that free money. Well, we talked a lot about length of history and how just opening those in the moment. And as Chauncey mentioned, making an emotional decision to say, okay, I want this stuff. And I also want the $45 they're going to give me, to resist that temptation and also see history as an important part of our credit score components. Fantastic. Thank you, Rachel. All right, so where do we go from here? Well, we can go visit a branch. I, as a member, like Dixie Branch, and I work in the main branch, but I really like the ITMs at Ring Road. So everybody, what's your branch? Jump on. John.
Well, I'm at the main branch, but I don't. For those watching, if they're not aware of the ITMs, you don't even have to go to a branch or inside of a branch. When you go to a branch, you can get most of your transactions done at the ITM or ATM transactions done there as well. So if you haven't used one of those, they have more hours than our normal branch hours also. So.
Thank you for that. Thank you for explaining. I was using a little shop talk there with the ITMs. And several of us work at the main branch, and you'll see us there. And if you go in, you can see Mike and his team. They do a great job. And Mike, what are your hours there?
Monday through Friday, 9 to 5.
9 to 5. All right, sweet. Anybody else want to share?
I want to throw out there, Holly, that for members who are making mobile deposits or putting requests through online through their app, those are actually fielded either at the main branch or at the member resource branch. So even though you're not necessarily face to face, there are branches that are servicing you when you're going that electronic means, because I've already shared that's a big deal at our house. We are all about some electronics. So
no, I love that. That's great.
Yeah,
So go ahead.
For those that are military or live on Fort Knox too, we have a branch there. But I believe as somebody had mentioned there, like every branch that's listed on that sheet right there has a bunch of talented and well-trained member or workers there that'll be able to help our members to the best of their abilities. So whichever's closer, whichever's more convenient for you, feel free to visit either one of those.
All right, it's recap time. We want to make sure that we retain what we learned today and what we talked about. So Lauren, will you go through those steps for us one more time?
Absolutely. So step 1, we're going to write down our goal. Step 2, we're going to add one behavior that will help us reach that goal. Step 3, we're going to schedule 10 minutes once a week to check in with myself. You can schedule more than that, but at least 10 minutes would help you obtain that. And then step 4, set a date to reach my goal, so we're not going to push it off forever.
Fantastic. Well, thank you all so much for joining us. And thank you, Abound team. Bravo. Great job. And if you're watching now, please feel free to contact our Abound team members, or you can email me. My information's right there on the screen. You can also use our financial education lessons and tools for free, as Suzanne mentioned. They're at aboundcu.com, and we welcome you to become a member. And when you visit a branch or you join on our website, select and share that you participated in Abound's financial education programs. And also, like this video, please give us a thumbs up and hit the subscribe button to see fresh videos from Abound in the future. So we'll see you next time, and we look forward to it. Bye.